According to an analyst, revolving Nigeria's power generation gaps could significantly provide new opportunities for private investors and boost the country's economic growth. CNBC Africa's Uwana Eckpate caught up with Wale, Shonibare, CEO of UBA Capital, started by asking what needs to be done.
I think in Nigeria we're starting from a very low base. I once heard a technical expert say that if you look at the power generation per capita in the US, it's equivalent to a chandelier per person, which is over 1,000 megawatts per person. Whereas in Nigeria, we're doing about 30 watts per person, which is equivalent of half a light bulb per person. So you can see the distance that we need to travel in terms of power generation per capita. But the good thing is that we've made a very good start, and with sustained investment in the sector, we should be able to, achieve a reasonable level of power generation per capita. If South Africa can do 40,000 megawatts, then Nigeria, with our population, we should be able to do about 3 times that, given the size of our economy, which is now the biggest in Africa.
So, Wale, is privatization really the answer?
Privatization is the answer, because government cannot be expected to bear the entire burden of investment in the power sector. But it has to be smart privatization with regulation, because it's a sector that government has to retain involvement in. It affects the lives of everybody in Nigeria, and there has to be regulation to ensure that there isn't monopolistic abuse in the system. So to that extent, the common man has to be protected.
So how do banks estimate the type of power project investments needing priority and the market requirements?
Yeah, projects requiring priority is going to be driven by the market, because to some extent there are so many different opportunities out there, and the best prepared projects with the strong sponsors have a higher likelihood of being funded. So what we say to project sponsors is it's good to do your homework. There are studies that need to be done. You need to appoint the right advisors and package the project in a way that appeals to investors.
Now, talking about risk assessments for Nigerian power projects, how do banks assess that?
There are risks that are specific to the project itself, relating to the project sponsors, the governance, etc. And there are sector risks which have to do with the environment. So in Nigeria, we know that there's still work to be done on the tariff. There's work to be done around gas supply. And one of the weak links is also in transmission. So there's work to be done there. Also collection and take a reduction of losses by the distribution companies. So all those will come into the risk evaluation that banks will undertake.
Lastly, what kind of return on investments can financiers expect from investing in power projects?
Again, return is related to risk. So to the extent that you have a good project with a strong PPA, predictable source of gas, and everything is linked up, you would expect that the risk rating will be a little bit lower, and for that reason they'll be able to get more competitive financing. But it's always difficult to talk about return in isolation of the risk. So each one will be different. So an MTN would borrow money at a lower interest rate than a startup company. So we have to compare like with like.
That was Wale Shonibare, Managing Director of Investment Banking at UBA Capital.